Hi again, chart lovers. Zafira back with some more tricks for traders. Today I want to talk about one of the most important tools in trading, stop losses. If you want to be able to trade for a long time, then you absolutely need to use stop losses in order to protect your money. Stop losses will protect you from losing more money on a trade that is acceptable. An appropriate stop loss can also help you stay in a trade longer and give you time to profit on the trade. Before you enter a trade, a stop loss should be established as part of your trading strategy. This is essential because knowing where your stop loss is will help you determine how much money to enter a trade with. For example, if you know that your stop loss is 5% below your entry, you will not want to risk as much capital as if your stop loss is 1% below your entry. Let's look at some examples of placing stop losses in different trades. When playing an equilibrium break, your stop loss should be below the low of the last higher low as discussed in my previous video. You can even use stop losses as an exit for the trade when you are profitable. This is called walking up a stop loss. If you entered this Bitcoin trade on the equilibrium break of 7189, your stop loss would have been the previous higher low of 6611. We can see that this equilibrium had a really nice bull break. Since this is a 4-hour bull break, you can walk up your stop loss as each new 4-hour support is created. So after some consolidation, we see that we established support at 7600. This is your new stop loss. After some more consolidation, we established a new support at 7820. By walking up your stop loss, you allow yourself to access a lot of the trade without risking all your profit. Once the trade gets very overextended, you can tighten up your stop loss to the hourly time frame. Had you used this method of walking up stop losses, you would have enjoyed the profits of a trade from 7189 from all the way to 9120 for a profit of 26.9%. That's a great profit. Other entries might be made by top fishing. Let's look at an example why having a good plan for your stop loss can keep you in a winning trade. Here we can see that ETH was very extended on many time frames after a huge run from the bottom. We can see that it hit a high of 712. On the next run until 712, you can short ETH with a strict stop loss at 712 in case it keeps running. We can see that once again it approached 712 and some might have panicked and covered their position, seeing that strength still there and seeing that Bitcoin was making higher highs. But by allowing your stop loss to stay in place, you can stick to your trade plan and see what happens next. You can see that it never was able to break through your stop loss, and instead the trade had over 15% in profits depending on your profit target. When playing an oversold bounce, it is important to realize that when conditions are very, very oversold, it is not always prudent to place your stop loss right away. Instead, you can scale into the trade as the RSI drops lower. Once the bounce starts, however, you do need to establish your stop loss in case the bounce is smaller than expected or turns into a bear flag. If that is the case, you can stop out and buy lower for another potential bounce. A few key things I want you to remember about stop losses. Remember to put them a little bit below a support, not on it or directly above it. Remember to place a limit order on your stop so that you don't experience a lot of slippage. And if you're going to be away from the computer, remember to place it. Lastly, remember that stop losses do not mean the trade won't go the way you wanted. And sometimes you will be stopped out only to see the trade go in the direction that you wanted. It's easy to play shoulda, coulda, woulda. But in the long run, stop losses will save you lots of money and allow you to trade profitably for a long time. ChartKids signing off.